So far this month, Netflix is up almost 8.5%, and that could just be the beginning of this run as they are set to announce their Q3 earnings on October 17th. So in today's video, we're going to take a look at Netflix top and bottom lines over the course of the last few years, as well as Netflix most recent earnings and some interesting numbers out of that earnings report. And finally, we'll look at their upcoming earnings announcement and what those numbers could look like. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. As I mentioned, Netflix is up almost 8.5% in the last month. However, the performance gets significantly better when we look at the year-to-date performance, because it is up almost 56%. And Netflix has been a very interesting company over the last few years, because it's gone through a stage of being very focused on growth throughout 2020 and 2021. However, in 2022, something changed. Netflix started to put up numbers where their subscribers were actually headed in the wrong direction. They were losing subscribers, and this was starting to show in their earnings reports. And this drove the stock down by 70% over the course of just a few months. However, since then, they have transitioned to being a lot more focused on the underlying business. Where is their revenue heading, and where is their EPS numbers heading? And not only has this change in mindset helped boost the stock price, it's also helped their metrics. We can see that back in 2022, their revenue was actually declining year over year in terms of the percent of growth that we were seeing. Prior to 2022, they were growing anywhere from 15% all the way up to 30%. However, in 2022, we saw their revenue grow by single digits. But in the past year, they've really started to turn that around. The revenue growth has gone back to almost 17% year over year, with the total revenue for the trailing 12-month period now sitting at $36.3 billion. If we go back 5 years ago, at the end of 2019, they were bringing in around $20.15 billion. And as Netflix has shifted their focus from growth to profitability, we have seen a big impact on their EPS numbers. For the trailing 12-month period, their EPS is currently sitting at $16.02. Back in 2019, their trailing 12-month EPS was sitting at $4.13. So it has almost quadrupled over the course of the last 5 years. One very obvious metric for when companies go through this shift of growth to profitability is how many shares they are buying back. And we can see this very clearly with Netflix, because up until 2021, their shares outstanding were consistently growing year over year. However, since 2021, we have seen their shares decline, and in the most recent quarter, that decline was around 2.5% year over year. And part of what allows Netflix to focus so much on profitability is their position in the market. They are the #1 player in streaming with 457.2 million subscribers. The next largest subscriber company is Amazon Prime Video with 200 million subscribers, and then you have Disney Plus with 150 million subscribers. Much beyond that, you're starting to talk about very small numbers, but Netflix is the clear winner in terms of total subscriber count. And for a lot of these user or subscriber-based companies, it can get difficult to grow at a certain point. We have seen this with companies like Meta or Facebook. As they have grown out their user base, they eventually get capped out by the number of people in the world that actually want to use their service or are even able to use their service. For Facebook, they're sitting around 3 billion users, and the population in the world is like 7 to 8 billion people. So at a certain point, they just can't really grow much more. And I think we're starting to see that a little bit with Netflix. So one of the ways Netflix is trying to get around this is by, instead of focusing on user growth, focusing on their average revenue per membership. In the US and Canada, they've been able to grow this by 7% year over year to $17.17. However, in Europe, the Middle East, and Africa, they have seen a slight decline year over year. In the Asia Pacific region, they have seen a slight decline as well of around 6%, but it's very interesting how Latin America is starting to shape up, because year over year, their revenue per user has actually declined by 3%. However, on a neutral currency basis, they have actually seen a growth in Latin America of 24% year over year. Ultimately, what that means is that there are macroeconomic conditions that are causing Latin American currencies to actually become devalued versus the dollar. And if we see that start to turn around, we should actually see an improvement in Netflix's revenue from this region. So ultimately, how are their third quarter earnings shaping up? We can start by taking a look at the forecast that they provided during their Q2 earnings. They expected revenue to grow by around 14% year over year in the third quarter. However, on a constant currency basis, this growth would actually be around 19%. And again, this is due to the changes in currency between the US and Latin America. They specifically call out pricing changes in Argentina and devaluation of the local currency. Also, it's important to note that during the last quarter, they actually increased their full year 2024 guidance for revenue. They're expecting revenue to grow by 14 to 15%, which was up from their previous prediction of 13 to 15% growth. And Netflix is set to announce their Q3 earnings on October 17th. Analysts have an EPS estimate of $5.11 and a revenue estimate of $9.76 billion. If they come in at that revenue number, that's around that 14% growth year over year. However, where things get very interesting is looking at their EPS numbers, because again, an EPS estimate of $5.11 is up significantly from the EPS they put up a year ago of $3.73. And right now, analysts have that growth continuing into the future. For 2024, they're expecting EPS to come in around $19.11. That is up from $12.03 a year ago. And in 2025, they're expecting that number to climb all the way to $23.05 per share. Keep in mind that right now Netflix is trading a little bit above analyst price targets. The average price target is $708.75, and currently the stock price is around $730. There is a low price target of $545, as well as a high price target of $900. For me personally, I don't own any Netflix and I don't plan on buying any, especially heading into earnings, because of how volatile this stock can be, especially if they come through and they were to miss earnings. I'm not anticipating that. I think Netflix is very well positioned and even positioning themselves better for the future. Right now, Alibaba is in my portfolio. I have Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. Palantir has been on an absolute tear. They went up to $43.62 today, which is absolutely insane. Right now, I'm up almost 370% overall on my position. But anyways, let me know your thoughts on Netflix. Do you own shares of Netflix? Are you looking to buy into the stock? Where do you think the company is headed in the future? Keep in mind, don't buy a company just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what did one volcano say to the other? Check the comments down below for the answer. Thanks for watching.